Everyone, welcome to the live stream. Today is Monday, May 1st, 2023. May 1st is here. How you doing? Hope you're doing great. I'm Jaden Sterling, and let's dive into the call today. I want to start with a stock rocket. So I'm starting to see, you're probably noticing this too, as the markets fluctuate, there are less and less companies that show up on the Stock Rocket page. But here's one today that I just thought was interesting. I haven't seen, this is a new company on this page, DraftKings Consumer Cyclical Online Gambling Stock. So 5 stars, $22.32 a share, above average risk. But I just thought this was interesting because as more and more online store or more and more brick and mortar closes, we're seeing a real shift from brick and mortar physical locations to online. And I think everything, as we know, is going online. And this company, even though this is their first appearance on Stock Rockets, this is a company I've been familiar with for a long time. It's basically doubled in the past 2 years. They've had a very steady growth, earnings growth, usership growth. Everyone, it just seems like it hasn't been this huge, unsustainable, out of control growth, right? It's just been they've been at it in a very consistent way, and they've also made acquisitions, which has helped this company grow too. So the big news of the day, I'm sure you heard, announced last Friday. It's interesting, all these bank seizures are announced on a Friday. But, you know, this is now the waiting to hear the fate of First Republic Bank. This is an even larger takeover than Silicon Bank that was taken over. So this is interesting because, and I think we have to be very aware of what's going on because just like in the last couple months, the narrative in the news was, and they did their best to say, First Republic Bank is fine, no issues, it has no collateralization, it's heavily collateralized, well-funded, and then, bam, come the end of April, they have to shutter their doors and another institution has to take it over. So what we are being told is an absolute lie in terms of what's going on in the marketplace, with the banking sector, with these financial institutions. So we have to be very aware that what we're being told is not at all the truth. And this is a perfect example. We were, like I said, we were just told, and interestingly enough, we were told by Jamie Dimon, who is the CEO, president of JP Morgan Chase. And he was saying, it's well collateralized. And now apparently his financial institution is first in line to take over First Republic Bank. So we're told one thing, the reality is something very different is happening. And I want to point out, because this hasn't really been talked about, but here is an article on MarketWatch back in February. So mid-February 2023 of this year, more than 107,000 tech sector employees have lost their jobs since the start of 2023. So that was essentially, all of January, half of February. Now we're at we're at May 1st, right? And 630 tech companies with layoffs of 185,000 people. So this is, I think this is starting to get more and more concerning, quite frankly, that these huge layoffs are taking place so far this year, and it's really not being talked about what what is being talked about are the brick and mortar, the shuttering of those doors, closing of these companies. So I don't know. I think this is the consequence of AI fully taking over. And, here, this is and I'll put this in the show notes, this page here, this layoffs.fyi. It's excellent because you can see how many, where in the US. It looks to me like easily half are non-US and the others are US. And then it shows in the area, right? A lot of New York City, a lot of San Francisco, California. Here, let me move this up here. So a lot of companies going through big shifts happening. Look, Cleveland, Highland Software, 1,000 employees. Roku, San Francisco Bay Area, 200 employees. Now, don't get me wrong. A lot of, this is helpful, basically eliminating overhead. Here we go, Electronic Arts, 780 employees. This is helpful to, because it goes right to the bottom line. This is a huge cost savings to companies. Some of the most expensive line items on a balance sheet for a company is their employees, right? Payroll expenses, things of that nature. And when companies can cut back like this, that is a direct savings to their bottom line. And it could very easily help continue spurring the equity markets to go higher. But look, and I found this interesting, Just Eat, 1,700 people. Isn't that the service or is that just where they send out food to subscribers? Maybe, I don't know, but that would be an interesting thing because food would be one of the last things that I thought would be impacted. Amazon, here we go, 9,000 people laid off. Amazon out of Seattle. So we have to ask ourselves, here's another Meta, 10,000 employees, Meta, right? And Meta just posted their earnings, by the way. I don't know if you saw back in early April, and they were off the charts. The stock skyrocketed 25%. I've always said if you want to do well in this market, you buy into companies that are creating this type of technocratic system that we're now finding ourselves in. It's companies like Meta, Amazon, and as they continue to cut their workforce, that savings goes right to their bottom line. It continues to fuel the price of the stock. So this isn't rocket science at this point. This is navigating this environment in a way that you really look at, with a discerning eye, what is going on right in front of your face versus what you're being told by lamestream media. Very important to create, to know, within yourself what is really going on here. And then you can make better decisions, right? You might decide not to have all your money in the banks. You might decide to, move some cash into more investments. Maybe you put more into equities. Whether you're in the US or in Canada, your insurance for your equity holdings is much more than your cash holdings. So you'd actually be better off not leaving a bunch of money in cash. In Canada, you're covered up to 100 grand. The US, 250,000 per institution, but rather putting it into, some type of, maybe in the US, if you have extra cash, it goes into a Roth IRA so that your assets are covered under SIPC, SIPC, rather than FDIC. SIPC stands for Securities Investment Protection Corporation, and that is a whole different entity than FDIC. So think about this time, think about what's going on, and how you can best navigate this time so that you don't get caught with issues of maybe having too much cash in a bank and that bank being taken over or having financial difficulties. I mentioned on last week's call that the new thing is to ding those good credit holders, like folks who have been paying their bills, have good credit. They're going to pay more on their mortgage renewal and any new mortgage. So all the lenders, this is a rule, not a law, but all the big lenders are in on this. Federal Home Loan Mortgage Corporation, FHLMC is in on it. Fannie Mae, all the big lenders are in on this. So it's not going to, you won't be able to dodge this. It is what it is. It's infuriating people, rightfully so. But so that is happening because they're saying that there needs to be equality in the housing market, and people who don't have good credit should still have access to buying a home. Okay, that's the narrative around this whole thing. And where are you? Let me see you guys. Hey, so that's the entire narrative is, let's make sure that homeownership is available even to those people who don't have good credit. Well, frankly, with the 40% increase in real estate values over the US and in Canada over the past couple of years, homeownership is already out of the question for folks that are low income, right? First time home buyers. It's literally impossible. But with this mandate toward equality, wanting it to be more fair, more equal for everyone to be able to buy a home, this is where the slippery slope starts. Because eventually these bank bail-ins will be these bank bailouts will become bail-ins, where if you have too much excess cash in your accounts, they're going to just go in and remove some of that excess cash to pay for all of these lenders that don't know how to run their own balance sheet. So at the end of the day, those who are astute with finances and have been able to navigate this time in a successful way are going to pay the price. And that's exactly where we're headed. So with this, equality conversation narrative that's out there where everyone should be treated the same, what have you, you just have to know that there's other things to do with your money rather than leave it sitting in a bank. You can be buying gold and silver coins and taking physical possession of these assets. That's one way. Silver has gone up 20% in the last 2 months. It's just had this huge run. Let's look at some of the other markets here. We've got the S&P down slightly, not any big action. Gold is down a little bit, below $2,000 an ounce. Maybe today's a great day to go in and buy some gold coins, right? Check that out. Silver's up slightly, $25.31 an ounce. We've got the 10-year at 357, which actually is right in line with a healthy market. I actually like that the 10-year sitting here at a 357 yield, so that's good. NASDAQ down, just down slightly. There's not in the Australian markets up slightly. There's just not a whole lot of action going on in the market because I think there's so much uncertainty. And when there's uncertainty in the markets, no one knows what to do. Like they just stop buying, stop selling. It's just kind of like parking assets in the hopes that at some point there would be some direction. All the direction is around this here, the fate of First Republic. And that's what everyone is waiting on pins and needles to see. The deadline, which I find very ironic, was Sunday. Yesterday, banks never are open on a Sunday, but that was the deadline of lenders submitting bids to take over this bank, First Republic Bank. And there are a few lenders who said, you know what, we're not even interested. Here's an example. Some of these same banks came to First Republic's aid in March with $30 billion of uninsured deposits. But they were reluctant last week to provide a second rescue on their own, fearing First Republic would be seized anyway. So that was, who was that? Citizens Financial Group and U.S. Bancorp. So they did a round of, here, let's help bail you out. But when things got too risky, they said, nope, we're not interested in pursuing anymore. The FDIC gave banks a noon deadline Sunday, and people familiar with the bidding process interpreted it as the prelude to a government seizure of First Republic. Which, that's exactly right. It is a prelude. It's the very first step to the government bringing First Republic into receivership. The FDIC may be able to find a buyer among the big banks that is willing to take all of First Republic's deposits and perhaps some of its troubled assets too. Well, of course it's going to have to take both. They can't just have all their money on deposits and then, not deal with these assets that are underperforming. It's just so ridiculous how they write these things. But anyway, I think JP Morgan is very much going to be taking over First Republic Bank. JP Morgan is the nation's largest bank. And they will just be a behemoth. Like anything Jamie Dimon wants to accomplish and wants to do, they're going to be able to accomplish it. And its attempt to purchase First Republic places CEO Jamie Dimon at the center of a national banking crisis for the second time in 15 years. He was the voice of reason during the 2008 financial collapse. And it's interesting, Jamie Dimon was the head of Smith Barney when Sandy Weil, so it was like Sandy Weil was the CEO, head of Smith Barney. Jamie Dimon was his right-hand man. Sandy Weil was the mentor of Jamie Dimon. And then Jamie went to, over the years, start to take that CEO role with JP Morgan. And, he's always been the one that you have to watch these guys very closely, because he was the one that said for the longest time, Bitcoin is just the worst investment ever. It's not going anywhere. It's based on nothing, while driving the price down of Bitcoin. And this happened a few years ago. And then secretly, he's in there buying it. The bank is just accumulating this huge position in Bitcoin. So that's why I say to you, you have to really view everything that's going on through the lens of your discernment, your own common sense, and definitely what your intuition is telling you about this time, because this stuff doesn't pass the smell test. You know what I'm saying? It's just like a lot of what is going on is not at all what they're telling us is not what's happening behind the scenes. Many deals are being cut and brokered, getting business done. Business is still going, right? It's still evolving, growing, but it's changing. And that's what we need to start understanding. Then we have an eclipse this Friday, May 5th. We just had a solar eclipse. This will be the lunar eclipse. So during times of change, that's when change happens, is during eclipse season. And we're right into it. So just be mindful of what's going on. Things could start happening very quickly. That's why you really want to make sure that you're prepared on a financial level, prepared with your assets. Continue to look at the investments that you have. The U.S. more than likely is going to continue to raise interest rates. They will continue to do that. They haven't stopped, nor have they said they were going to. So how do you mitigate interest rates continuing to go up and up? Well, you get rid of your fixed income assets, like your any type of bonds, CDs, any asset that has a coupon or face amount always goes down in value as interest rates go up. So you want to eliminate those type of things. Stick with equities that are the big names. And then up and coming companies like we just found on Stock Rockets today, this DraftKings, real executing in their business, doing great. It's got 5 stars. Let's take a look at the chart. We've got the chart that is, let me do away with my webcam here. So see how it's had this really nice bounce off the $20 level. You've got the stock price above all of the other averages, the SMA short-term, intermediate, and the long-term. We've got the 200 moving day average sitting at a little over $15 a share. That's providing the long-term support for that. See, as I put my cursor, sitting at 1603. You've got an MFI that's still decent at 72. So we've got room there on the upside. And that is my pick of the week. Hope you have a great week. Tell me in the comment section if you want me to talk about if you have a question about your own stuff or anything, I'm happy to answer it. And hopefully you've been checking out our podcast that we've been doing. I think we're on episode 7 or 8, but we've been into it for a few months now, and we've just been slowly putting out clips on social media. Thank you to all those who are sharing them and liking them and talking about them. Really appreciate that. And I want to give a shout out to Chris Johnson, who is a big advocate of ours, really just a great guy. And he started a podcast about masculinity and men, getting in touch with, it's just, I don't even want to describe, it's just so good. Take a listen to it. I'm also going to put the link to his podcast in the comment section today. So y'all have a great week. It's going to be another interesting week. Stay focused, stay out of fear. That's the number one advice I can give you right now, is just don't let this stuff rattle you. There's so many great things that are happening right now. So keep your vision tuned into all the really good stuff, and you're going to start to see things unfold in a very powerful way. Thanks again. Have a great week.